Debt restructuring remains a sticky issue. How much progress can be made when China maintains its position that it will not take a haircut unless the World Bank does?
What we heard here is a more constructive position taken by China. That is, they want to see multilateral development banks contributing through grants and highly concessional lending. And that is possible. What is not possible is for the multilateral development banks to take a haircut that could undermine their AAA rating. And I want to be clear why this is not possible. Because the membership of these institutions relies on them to be able to raise money cheaply and then transfer to them low interest rates. That is what they do. So I'm encouraged by the understanding that there are ways in which multilateral development banks can be net positive financier on concessional terms, helping countries with significant debt problems to overcome them.
We know that the G20 nations have been urging China's participation. Has China's participation been productive? What are we hearing from China?
What we have seen is China first contributing to the debt service suspension initiative, and they did that quite constructively. Secondly, China joining the common framework and co-chairing the creditor committees for Chad and for Zambia. For Chad, we have a positive outcome. For Zambia, there is still work to be done, and I want to use this conversation to urge a completion of that restructuring and a memorandum of understanding for Zambia as soon as possible. The country has done an amazing job reforming the economy. They deserve that restructuring. And we see now China joining together with all other creditors, old, new, private, public, the new debt roundtable. And this global sovereign debt roundtable is so important to create space finally for everybody to sit together, including the debtor countries, including hearing their voice, so we can resolve the problems that have been obstacles for more effective debt resolution. And I welcome China's participation in it.
You're suggesting that progress has been made, but a resolution is still a long way off. Does it make sense for debtor nations to perhaps settle it with the bondholders first before the lenders?
It is important to recognize that debt restructuring is always country-specific. It would be done depending on country circumstances. And in some cases, settling with bondholders first would make sense. What matters is for fair treatment of all creditors, and that cannot be done without participation of all creditors. And therefore, the common framework, as well as the new sovereign debt roundtable, they're paramount to have commonality of view and then settle on principles that allow fair treatment of creditors and debtors and faster resolution of debt problems. We cannot continue the way it has been so far with unpredictability of timeline, unpredictability of outcome. We have to overcome the differences that exist. And I want to say that it is important for China to be part of this. Why? Because China is now a large creditor. And with this comes responsibility for them to be part of the solution.
Another outstanding issue is also reining in inflation. Yes, we have made progress. Inflation is easing, but it remains elevated. How comfortable are you that central banks have managed to contain inflation?
What we have seen is central banks acting decisively and talking with each other so they come up with a more coordinated approach is paying off. Headline inflation in quite a number of countries is streaming down. We are not yet seeing the same happening with core inflation, And I want to be clear, we are not yet seeing inflation going down to target fast enough. For this year, we project inflation to drop from 8.8% to 6.6%. For next year, we project it to drop further to 4.4%. But let's remember, the average before we got into this increase of prices was 3.5% globally. So central banks need to stay the course until we are comfortable that price stability is returning. Why do we need price stability? For investors to invest and for consumers to spend. In other words, to secure the foundation for growth. Very important we have it.
The dollar is a huge issue for emerging markets, emerging market debt. We're beginning to see the dollar rise again on the back of the Fed suggesting, or rather Fed Fund Future suggesting, terminal is going to 5.5%, before that is under 5%, some suggesting even to 6%. I mean, how concerned are you with this rising expectations of terminal rate?
I am concerned about emerging markets and developing economies that have very little fiscal space or none, and at the same time they have to service debt, big part of it of which is dollar denominated. On top of higher interest rates, they are struggling with the devaluation of their currencies. And for this reason, we are very keen for countries that have debt problems to act swiftly. We have been encouraging countries to move forward with debt resolution, not to wait. And we are seeing now that, encouragingly, other countries are stepping up, like Ghana has done recently. We also have to work with these countries to help them overcome their difficulties, help them create some fiscal space, and that is where the IMF is a very important partner to countries, help them to put in place strong policies. Let's remember, simple lesson from the pandemic. Countries that had strong fundamentals, they handled the economic crisis caused by the pandemic better. The same way people with strong immune systems handle the virus better. So we are seeing an increased interest in fund programs, both because of the necessity to come up with financial support, but also because of what we can do to help countries advance reforms that will make them stronger for the future.